Doctor in pretty good shape this morning. Let's talk about the action from the last 24 hours. And as earnings season begins, Jon Najarian joining us here in studio, co-owner of Market Rebellion, author of It's Not an Option, co-author.
It's not an option.
What's going on, Jon? Good to see you.
Hey, Oliver. It's fantastic to be here. Thank you.
Absolutely appreciate that.
Love your audience and look forward to the discussion on trading and opportunities.
Yeah, we always have good chats about the market. I love our conversations, and it's good timing because yesterday was like this crazy inverted day. So kind of take me through your process of how you're viewing that, because everything got flipped on its head.
Yeah, it seemed like it was, in the old days, Oliver, that would have been a risk-off day because you saw all the biggest cap stocks. They were just selling almost indiscriminately. Every one of the Magnificent Seven was flipped. Yeah, was just flipping around, and you and I will get to Tesla, which had its own issue, but they were pretty much selling across the board in the big tech stocks that had got big gains. And what did they go into? Apparently into the small caps. The Russell 2000 was up like 3%.
Yeah.
And so when you have one falling pretty dramatically, 300 points plus for the NASDAQ, and the Russell moving up like that, it's pretty clear there's a rotation. It wasn't just probably a one-day event, but I don't know that it's going to be a trend for weeks and months. I think for whatever reason, a lot of big hedge funds decided, okay, looks like the fever's broke. We're going to get that rate cut. And, it's what, 88 or 90% at the CME tool that they monitor, exactly what's going to happen at the next Fed meeting. 88 or 90%, pretty much a sure thing. I mean, that's as close as it gets.
Right.
Obviously, we can get all the way to 99 or 100 the day before. But yeah, that was a big day yesterday.
If it's there by the time the Fed has to make a decision, they go with it when it's at 100. But we still got a couple months.
Months, and we got that producer price today that was
a little warm.
Warmer than they'd like.
Yeah.
So that takes pressure off, if you will, Jerome Powell and the Fed, as far as everybody saying, well, why are you going to wait till September? Do it now. Do it now. Make it 50 basis points. Do it now.
Yeah. I mean, there's a cacophony of economists, and I kind of feel like to a certain degree, people like to comment from, the proverbial peanut gallery, us who don't have to make those decisions, so we can look back and say, see, I told you the Fed should have cut in July. But realistically, I mean, he's not going to do that.
Yeah, realistically, especially right at the beginning of earnings season here, because even though the Fed's job isn't, how are the corporations doing as far as earnings? Yeah. That's not their job. But it's an important input for employment. So if a number of companies, in particular housing, that's the largest employment category, really, because it goes from everything from roads to sewers to toilets to whatever, home building, if those companies started saying, hey, we're looking at the possibility of layoffs and this and that because, for a variety of reasons, then I think the Fed might be more pushed towards making a move. But I don't think those kind of numbers will bear out this quarter.
Okay. What do you think of the banks so far? Because the timing is interesting. Yesterday, a highly cyclical day.
Yeah.
Banks generally have good lens for the economy. It seems like the net interest income stuff is waning. Wells Fargo is kind of an example of one of the weaker ones. But then you look at JP Morgan, it's like, boy, it would take so much to really put that business under stress.
Yeah. And Jamie has built an amazing machine that just prints money. They got that one-time boost from the Visa, I think it was,
that was a big
exchange of stock.
Yeah.
But other than that, it was just a very, very solid report in any quarter for JP Morgan. Like you say, Wells Fargo, they always seem to have some troubles. Sometimes it's a group that is doing something wrong, basically creating ghost accounts or whatever. I think all of that is in the past now. I think they're really focused in on being a bank, but they have massive exposure, of course, to real estate. Wells Fargo does. Of those big four banks, Citi, Bank of America, Merrill, JP Morgan, and Wells Fargo, I think Wells Fargo has the most exposure in that group.
Yeah.
So I think any excuse you give somebody, Oliver, to say, you know what, I'm going to ease back a little bit. Maybe I'll boost up my bets on Bank of New York, or I'm going to boost them up on JP Morgan, or go to some super regionals or something. you could see that, but any excuse for them to lighten up on Wells Fargo, it seems they take it.
They take it generally, yeah. Pretty major break in Wells Fargo chart. Yesterday was a pretty good bounce in the regionals. It seemed like there was a lot of optimism. I described it yesterday as the market pricing not just a soft landing, but like an immaculate one. The way the interest came back into some of the kind of higher risk areas, if you will.
Yep.
I mean, even if we do start in September, and then you've got an election and a possible shift in power, like, is it 25 basis points going to make a difference for a regional bank that's got exposure to a bunch of, debt wall that's coming up on real estate businesses and stuff? I mean, are we really?
The answer's easy, and that's no.
Right, yeah.
But I think right after the election, if everything is roughly the same as it is now, after the election in the first quarter of 2026, or 2025, sorry, I think we will see additional cuts.
Okay.
I think the Fed really does not like to play God, if you will, into elections. They'd rather not make multiple moves into an election because it seems like they're favoring one party or the other. Certainly, there's a lot of people that would say that.
Yeah.
But if the inputs are there, they're going to have to move. And I think the inputs right now are telling them they have the room, they can cut in September. It's very likely that that'll be the only cut until after the election, in my mind.
Yeah, agreed. Let's talk some trades and some specifics here. We mentioned Tesla. I mean, it's frustrating to see Elon kind of cave right into the cynics and the critics on the timing and the promises falling short. Big pullback in the stock. I mean, does this invalidate the huge run it had up off the lows, or what do you think?
I don't think it invalidates it, but it does put it off, and that's what Elon did yesterday. Sadly, as a Tesla shareholder, option trader, I like what the company had done over the past, 11 trading sessions or something.
Right.
Put on a lot of nice market cap.
Yeah.
Then we reversed yesterday from about 270 or 272 in that stock to fall all the way down into the 240s. That's a pretty ugly drop. $30+, massive turnaround. And it was, delay of Robotaxi, delay maybe of that Model 3 variant and so forth. Those kinds of things, Oliver, happen for a whole variety of reasons. Look at how long it took them to finally get the Cybertruck out there.
Right, yeah.
But overall,
with time, he comes around.
Yeah, but this guy is the world's greatest cheerleader when he's got the things to cheer for.
Right.
And he was talking about, robotaxis are going to be $1 trillion business for us. And you're just like, wow.
Yeah.
And, the stock zooms. And then he pulls back a little bit like he did yesterday with, we might have to push that event out a little further into the future. It's natural, I think, to see a reversal yesterday, a little continuation today, but I don't think we go back down. I think the April lows in the 140s or something that. I
Still
think that
far
was a
ways
gift. Those areas in Tesla stock were a gift. And there's now some nice fat volatility, and you and I know if you own the stock and you decide to sell some calls.
That's what I was going to ask. How do you manage the position?
Yeah, you could put on a collar, of course, buy a put underneath the market and sell an upside call to pay for that put, sort of locking in a range.
Okay.
But then a lot of people like myself are just true believers in the stock, in robotaxis, in all of the stuff that Elon's doing. The AI side doesn't get nearly the credit it deserves yet, but it will.
Sure.
I mean, look, Accenture gets $900 million in AI business. Tesla's going to be a $500 billion or $1 trillion AI business. I guarantee it, because they've got all that data more than anybody else in the world, including BYD, Volkswagen, any of their competitors for these what goes on in these EVs in a variety of conditions: snow, heat, wet roads, all the rest. I think that is going to be really and that's just part of the data, of course. The rest of it is how often do you go to this kind of retailer or that kind of retailer.
Yeah, they know where you're going.
Exactly where that car is moving.
I'm with you. It's what was kind of shocking to me how bad the stock was performing when the AI kind of rush was happening. So a little delayed effect when they announced the Robotaxi stuff. I like the idea of the collar because it's hard to imagine, even if the timeline gets shifted for their implementation of robos and whatever, it still could be such a massive market that if this move reflects that, why would we unwind it in its entirety? So that's where kind of the collar makes a little bit of sense. But also to recognize how quickly we moved on that until now we actually get the event. Seems like maybe you do have a little upside kind of cap there possibly.
Yeah, and why not let time work for you in that regard? Because it works against Elon and shareholders when they push out an event like this, but that works for you as somebody who sells that upside call, somebody who sells that 270, 280 call or whatever it might be, 250 call, depending how aggressive you want to be.
Right.
And then just let time go by and that air just comes out of the balloon and all that premium you get to keep.
All right, right now shares coming back a little bit here today. They were actually soft earlier and now bouncing back. Jon, great conversation, great to catch up.
Thank you. Great to be here, Oliver.
Yeah, good timing on a fun 48 hours for the market. Jon Najarian, co-owner of Market Rebellion, co-author of It's Not an Option.